spending this money. So, what are we going down the road actually and just to introduce themselves just in terms of stage, sector focus, size?
Hi everyone, I'm Sheena Jindal, founder and managing partner of Federal Group Capital. We're an early stage fund based here in New York City, investing primarily in tech founders. And then like more MIT, seed Series A, $1 to $5 million checks at seed, funds flowed with that for days, and very high concentration of high conviction strategies. So no more than 15 investments per fund. Yes, invested in all things AI native infrastructure, some vertical software, and frontier tech.
Hey everyone, Gideon, Hayden. One of my co-founders of Biggers Funds. We started the firm about 9 years ago. I started with 2 co-founders. All of us prior to being investors, we were all operators. Started companies, scaled them, sold most of them, primarily in enterprise software. And that's what we invest. So we have a $300 million fund. We're investing Series A, 2 to 3 million on the low end, 15 to 20 the biggest we've written. And we tend to invest in more technical categories, cybersecurity, data infrastructure, cloud infrastructure, data infrastructure, but we are by no means limited to that. But as long as you're in customer's business, and you're building software, have a conversation. That's us.
I'm Chief DFO of Main Ventures. We're very vertically focused, so everything's B2B, financial services, or healthcare. We're investing anywhere from 3 on the low end to 50 on the high end, and offering whereas leads are going a Series A. We're investing at our second fund, which is 250.
I'll be super quick. The thing to highlight is that I invest in consumer, prosumer, LGs, without SaaS, SMB, and tech. We write $1 million checks. So if anyone wants to top off before you get that big end.
So, listen, before Series A, everybody in here is wearing on average 5, 6, 7, 8 hats. And at some point for this company to scale, you've got to either take some things off of your plate. And a lot of founders here are trying to figure out, like, where am I going to focus? Right? If I am trying to figure out how to divide my time at this stage of the game between product, sales, hiring, how does that start to shift and how should it look before it? Where should these founders spend the bulk of their time? So, Sheena.
Sure, absolutely. So look, quite a bit of this is very business industry specific. You have really 2 jobs as a founder. One is to make sure you have customers, they're happy, they want to continue working with you. Remember that many Series A founders, you can start doing customer references, show your customers are happy. On that side of this, and we're not trying. The second is thinking about fundraising. And so you should start making sure you have ducks in a row with your metrics, your studies, your customer references, all of that. I think sometimes these processes end up losing momentum because founders are spending a lot of time building the deck, then building the data room. If you've got everything ready to go and off the shelf, you can get this done in a cheap versus letting it drag on, which is when last thing I'll mention, and I think someone brought this point up earlier, hiring is harder than you think it is. I do always think it's nice if it's generally do that less ideas and money to engage them. Because you will then burn a few months doing that, assess saying to something I see to that. So that's kind of my trifecta. I prioritize.
Rohan, what about you?
Yeah, I mean, I'll echo, especially Sheena's first point. At the Series A, from our perspective, we're really assessing, have you built a product that works, and have you built a product that both creates value for your customer, hopefully can stand over time, captures that value to an extent where it's interesting and exercise outcome. And so for me, our founders to actually be very much focused on product and sales, but talking to customers, really understanding the users, that's where everything starts. And like that passion and customer centricity is the thing that jumps out for me in the deck and in that first call. And everything should be so you need to hire people to help you with that process because you're not investing my time. There's someone who can speak the language of a customer base better than you can. So be it. Ideally, it's you as a founder that's doing that. But to me, it really starts with product and sales. And once you have that product that's working, you're starting to operationalize the builders and start to think more about hiring and kind of expanding the team. Yeah, Pre-Series A for me, it all jumps to the concepts.
So earlier this year, there was a whole conversation about founder mode. There is the sense that, in an early stage, CEOs are, deeply engaged in a lot of things they're going to have to sort of, and when you're pitching for an A, at some point, VC needs to imagine you hiring beneath you, hiring a bench, director level folks. And I'm curious about if there are any particular areas or just at what stage you want to see and where it's there's de-resting around like hiring a bench. So Gideon, as a team of former operators and stuff, obviously I'm sure you guys are pretty opinionated, but like how to maintain that like, hands in everything mode versus spending time on a bench.
Yeah. My view on this is as long as possible. I actually like I don't believe the choice between bench strength and maintaining like this founder mode status. I don't think that's a choice someone needs to make. I think we both need to be hiring exceptional talent, and you also need to be operating and have your hands full on things for. One thing I see is like when a company raises a series A, they think they need to something like a big company, and they hire a whole level of like VPs to do this, and you were told that they came from some big companies, they understand how to do everything, when really they just are going to go hire those people to do it for them, and the founder begins to lose some of that like information and intensity. And my view is they should hold on to that for as long as possible. I would argue Sam Altman's still done it. So you need to be doing both. You need to hire incredible people, and you need to operate with a certain intensity as you possibly can.
Brad, I want to hear your take on this, having been on both sides of this, and maybe some of your employees can weigh in on.
It's maybe because I'm like the seed stage venture planet on a Series A. But I was like loving how genuine everyone's answers were about what to say. Like, oh yeah, once you have customers and you really like it above. But I was like, okay, as soon as you have 3 months of consecutive growth, and then you believe that you can absolutely manufacture 3 more months, that's the perfect time to rate it. Because you need to, 3 months of growth, like VCs will like pick that, chart and then just extrapolate it up. And then they'll die if you have a flat month during the thing. So basically, like, how can you throw every piece of energy at like getting through the close with 3 more months of growth? And that's when I tell my founders. So I mean, how many VCs have invested in something and just with money all the time?
And do you still have your hands in everything as much as you need to, or are there some like? Where's your team want you out?
I mean, because I have too many jobs already, like I'm desperately trying to get out of things, but like for Fonzi, I'm here at Fonzi. I think once you've stopped learning, I mean, it's kind of what I think that when founders should stop and they would place himself. If I've done IC sales, like I understand what the sales is, like I understand how to convert, like doing IC sales forever. So I think I should find someone that like could do a better job than me and then replace myself as quickly as.
I'm gonna you pull up my second and I'll bring it back to Rohan. What are some things that feel productive at this stage? And like you get caught in playing work, but aren't really moving business forward.
Meetings. I mean, I don't know how much that's idiosyncratic to me because as a VC, that like kind of is your job, sort of. I think you can like spin up so many activities in the beginning when you're like really looking for something that works that you start all of a sudden you feel you're playing with like 4 different marketing channels and you're trying all these different marketing channels and you're kind of like, okay, well I've been doing them, so I kind of want to keep doing them. But like most businesses probably account $1 billion. One solid marketing channel, maybe 2. So like if you're running 4 as a startup, already have too many. At least 2 of those should be on the chopping block, not just like keeping doing things. I think one of the challenges of experimentation is that like even if it works a little bit, you kind of don't want to get rid of it, but you should just constantly chop it. market.
Yeah, I think the framework or what I've seen too often in Pre-Series A is um, founders talking about what they're going to do or for their business more than not just kidding. And so I think that manifests a lot in meetings and thinking about building brand, being on social media and posting on LinkedIn versus kind of focusing on the actual work to be done. I think that can manifest a lot in outlining like a beautiful product vision versus building, especially now with all the Gemini like bot building tools, like building a nice RPG and putting it in front of the user. So I think it manifests in a lot of different ways, but like the framework that I have was when you're thinking and talking too much about what you're actually doing versus as you think like that's where you fall into the trap. And breaking into that, so like sometimes I get tripped into that during a bunker. It's like someone could build a beautiful pitch deck and talk very eloquently about their business, and then I had to like sit back and ask myself, are they going to actually like move fast, or are they just gonna McKinsey consult have a McKinsey consulting project for every like product they're going to build instead of actually like doing the work? So that's how I think about it.
So I'll add in one my own here, and I think that's BD chips with larger companies or access to companies. It is like the siren song of the startups where you're the small company, you have to scrape for every customer, right? And you have some partner who has access to 1,000 customers, right? You could just only figure out a deal with them. It just feels like it would have been an amazing experience. Timelines are different, right? You'd like to get this deal done in 30 days. This partner would like to get this deal done sometime in 2026, right? Which could mean this month, right? And then other times, the person you're meeting with is a BD person or innovation person or whatever the heck called. Their job is just to take meetings with people and to imagine deals. You know, listen, some of them come through, but I know a lot of founders who've spent overspent time on like a white whale BD deal, a single platform, did a deal with, I don't know if it was like Verizon small business or somebody along those lines. And they are, yeah, they technically have 100,000 small business customers, but that's just like a bunch of people that in theory have access to a website of like Verizon / SMB partners that no one ever goes to because they auto pay, and literally used to get them like 2 leads a month. This in theory 100,000 small business customers, and it absolutely amounted to nothing, and it was like 6 months of negotiation or something like that. So that's my bringing you passing the mic this way, so you're gonna get the next one. So I think after a Series A and you start to, scale your team capacity to co-founders, culture becomes harder to change and harder to shift. Wondering about what are some of the early habits you see in a successful company that lead to like a high performance culture of doing and ambition and then movement, and what aspects of these processes do you wish that like pre-Series A founders were more intentional about in terms of?
Yeah, it's interesting. I view this topic as, culture is a set of behaviors, not a set of words that you put up on the wall, right? And so I think it starts at the top, and you as a founder, CEO, need to model the types of behaviors and culture that you want to see in your company, and that's where it starts, right? So if you expect people to be doing 996 every PM, like working like crazy, and you go home at 4 PM, that's not a good look, right? You need to be modeling the behaviors that you want to see. And I think that also where companies can stray away from that is in hiring, right? So, you was talking about before, but you have to be very deliberate, not just in the capabilities of who you're bringing on the team, especially when you're 10 to 20 people. That next hire is going to skew your culture in some direction. We want to make sure that they are very aligned, very aware of the environment that they're getting into. So yeah, you've got to model the behavior and ultimately win some of the problems.
Just because you brought it up, the 996 thing, right? Do you have a, not preference, but what is your view on the scalability of intense, restless cultures? Like when you're a small team, you have way too much stuff on your plate. Certain founders are just kind of always working. Is that scalable? Is it healthy?
Is it healthy? Probably not. But I think, if I were to look at the top performing companies portfolio, what they all have in common is they move with incredible speed. When they say we're going to hire this person, it happens next week. When they say we're going to deliver this feature, it happens over the weekend. So you can't fight gravity unless if a company is doing more and creating more jobs. I do think there's something to that. Yes, that companies probably can have an advantage, and especially in a world where modes seem to be disappearing daily. I think the mode that a lot of companies, the one mode that I think can kind of endure is speed. So we actually test for that, and when we're engaging with the company, like how fast are they getting us data that we're requesting, and how. So I don't think ultimately that's sustainable in the long term, but whether the company into the world is a miraculous achievement, so it takes kind of a miraculous effort. And yeah, that's kind of is what it is, I think.
Yeah, absolutely. I mean, I echo a lot of what Gideon said. It's probably not going to really very many friends in this audience, but there is a reason why a firm only invests in 15 companies per fund. It is rare to be able to find founders, and we don't really think that many folks exist or that's expected or normal or sustainable for most people. I have a founder the day after we closed on the seed round, he hadn't trained for 9 months, and then it is a specific type of person that takes on Herculean. So we look at signals like this and many different things. Look at dimensions like this across many other facets of his life to assess the capacity. So it is really important to us. I think that being said, culture does come top down. And you do have, but I also think that's very self-selecting. If you know that you want a team that's 996 or quite frankly more than that, you should put that in your achievement. You should be. So I think a lot of this is just moving by example. And I think founders really need to get caught here. I had an experience a couple of months ago. The hesitation was as I was down in San Diego, the team is based in SM. And I brought that up during our interview, and he said to me, Sheena, there's so-and-so on the team, and every time I've chatted, it showed that it has to be. He was like, oh my gosh, you're right. I have to have engineering because that's pretty hard getting down. So examples people take notice and make sure you're hiring a bit to this, willing to this and expectations. Yeah.
Let's see what you're saying is people are hired realistically at this stage. Somebody else has mentioned knowing who your next hires might be ahead of time. What percentage of the time do founders in this stage choose on hiring and you have?
For us, it's a bit unique. We are particularly focused on technical founders, finding fantastic faculty for engineers are very hard and most importantly, are very expensive. So we have really found that our founders win on relationship and mission orientation of what they're building. It's good. They're paying total cost. And so given the ideal orientation, we do find a lot of core founders and we work in there for charities within their respective former employers. That's been incredibly effective to getting them over the total comp barrier. But I do really think that it's probably 10% of me.
Well, as you can tell, from a hiring perspective, what I would say is that you can hire for 5 days a week in the office, and some companies do put 996 in their job titles. What I will say is those people have a lot more time hiring more than various people. Anyone over the age of 28, and as soon as someone has a family, it's going to be a lot harder to convince them to be sitting in the office on Saturday. So I'm not saying it's not possible. And to your point, a lot of those hires are people that they already were friends with or they're hiring in network. But I will say it isn't worth $1 billion yet. There are probably some trade-offs in terms of expertise for energy, and you have to decide on a case-by-case basis. Is it more important that this person's working 72 hours a week, or is it more important that they're like this core piece of you need to like get to the next level right now. And maybe it's okay if they work 50 hours. That's the side of case by case.
Speed is not time. Those are the two things that, like, you didn't mention, like moving fast. You don't always move faster by putting more time into something. So figuring out ways and hacks to give you, do multiple things at once, or find shortcuts, or just even actually, I know one of these days we'll do a panel where VCs will talk about the biggest failures in their portfolio, talking over this, but it's not something you hear VCs talk about a lot. But one thing I didn't realize, if I look at my own course, spending too much time on the one feature that one particular customer really wanted, or maybe perceived that multiple people wanted, that ultimately didn't. So, like, sometimes cut down on the product vision and sell more. Pick one versus the other. I think you put a lot more person hours in those terms doing this. Last question here for this panel. Peter, we'll start with you. That's what I know. Yeah, that's it. So beyond metrics, and this also, not all revenue is like revenue is not revenue kind of thing where sometimes, what are some of the second order measurements of either revenue or things going on in the company that you pay a lot of attention to? For example, like getting a big customer versus showing that you can do the motion warm up and getting velocity to closing, or consumer engagement versus actual willingness to pay. What are some of the ways you dive a little deeper?
So we invest in companies that are referred to like the largest financial institutions or insurance companies, health systems. So it's not uncommon for us to see a company at PA that has one third more what people recognize, which can seem exciting at first. It's validation, and that sales cycle can be complex and often too long. The question we're always asking is this one-off or is this repeatable? Right? So who else is in the pipeline? It's reaching a lot to put it to. Do these customers look like that first? What are they sharing the risks? What are the differences? And often post-purchase, we're talking directly to that customer, or picture if we can, to understand the nuances of that. So I would say that the very first logo can be really exciting. Happy on so many data points. Is this really showing a trend that you could peek out into the future? The second thing on just revenue growth is around finding the right flow. This is not a Series B. I don't expect that a coin operator to go to purchase yet. But as you point out, your financials of what you expect to hit in the next 3, 6, 12 months, does your pipeline showcase that? And some of that is a little bit storytelling that's real, but the reality is that you're not going to have the most fulsome pipeline to put out a believable story to be able to extrapolate where anyone's story.
Yeah, I mean, on a similar vein, so we invest in enterprise software. We tend to focus less on, are you at 1 million, are you at 2 million, are you at 3 million? We tend to focus a lot more on customer love. Actually talking to these customers, understanding, is this mission critical for them? Understanding if you took it away tomorrow, would they feel pain? All those questions. And then we also focus a lot on like logo quality, right? So cornerstone of balance is this concept that we have internally where, we've observed, this isn't always the case, but we've observed that if you get to a certain critical mass of like what we would call cornerstone accounts that other customers in the industry know, recognize, and respect, certain magic things start to happen in the business. Like you have social proof. People give you a little bit more credibility and maybe more leeway to buy your product. If you can tell them that, how into your product and they're having massive success, and that just helps some of the downstream things become easier. So we focus a lot on like customer love in the product. It's surprising how few companies actually show up with any form of usage metrics at PA. When you ask for it, it's hard to produce. Having that telemetry in place, I think, is important. And young folks love is the quality of love is.
Before we take one or two questions, I'll just do a timing check. We're gonna go into small groups after this. 140 and jump to 10. The 210 time of snack. We'll wipe out on those tables over there. And we'll take a 10-minute break and then we'll do our
Relevant to what you need to be set.
Marketing channel that, you have tested that looks online and has shown you result. That's great. In practice, like getting to 1 million or 2 million in ARR, whether it's a consumer business or a B2B business, it's actually not that much, right? So like, if it looks like that should be able to scale you to 10, 20 million dollars, that's all you're doing.
Do you think, and you guys is very capable, the advertising channels tend to be looked at a little bit skeptically by the investor? Not because like you'll eventually have that as part of your mix, but I don't think you get as much credit.
Question, right? So we're this profitable.
I don't think they'll think that it's infinitely scale.
Maybe to 10 or 20, but I don't like having all of my eggs. So they have built out of their own channels. I would like put everything into that, just all team.
I think you nailed it on the control. The idea that you own or control or have impact on a channel, I think that's why. Is that if you're, maybe doing really well on Meta, but then they decide to change their algorithm or something along those lines, I think it's seen a little more risky versus like, I have a portfolio company space whose main channel is the 5 conferences that every single buyer in their space goes to every year. And honestly, to this day, they're at over 40 million. % of their leads emanate from these 5 industry conferences that they just know and spend money on, and they've gotten bigger and bigger every year. Like, that's where it really is, and it's working for them, but it's also, it's not clear that like the conference is suddenly going to change. Because the same type of conference, everybody goes every year, versus like, there are lots of consumer companies where algorithms have changed and all investors found that things have become less effective with products. So, but I think something you also talked to.
The time is back to my earlier comment, but is it consumer bond company?
Yeah.
I mean, that's great. And you obviously have to blend, organic and paid cap. I guess my plan would be, okay, what are people looking for a CPG business? $1 million ARR, if you're looking for like a Series A fund, right? You got the scaling that like 30, 40, 50% month over month, 3 months in a row, and then 3 months through the raise. And that's what I mean by kind of like, you act, because a lot of people will have paid and just barely there, and like it's already kind of capped out. But if you're scaling, you're scaling assessment over month, capped is still dipping as you're like actually understanding your customer better. People are going to invest.
So talk a lot about Series A. If you go down to the seed level, what traction do you look for in B2B if you're like selling to maybe mid-market or to enterprise?
Yes, at the stage, which I probably will be spot that there's certain answer this, I'll go for it. That's what we answer there. From a traction standpoint, I look for to copy a phrase or really far. Right? So you want a customer or two that shows that there's something that's working, brings value to them, going to continue to stand with the product and continue to work with you. So to me, it's less about the action of revenue and traction associated with that. There are so many signals like how much value do you expect to create and capture and how big is your speed. I think that's the majority of what we're really digging into. From the actual, own perspective, for us, we're going deep on who are the early users of the customers and what's the piece of scan value.
I found those 2 things that achieve. I think more so than anything else, it's like predictability. You go in and you tell a story about like, here's what I'm going to do in the future. And VC is sort of like, how do you know? It's like, well, I tried to lean into this B2B channel 6 months ago and it worked really well and it continues to work. And I'm clearly been able to improve it over time. The metrics have gotten there or whatever versus like control over channels, it becomes more predictable. So it's a combination of like, I had an intentional plan and it worked. And I believe for these reasons it can continue versus like, I had a company that, a consumer company that occasionally their revenue would pop because some usage of the product went viral, totally unpredictable. And in fact, they freeze. They had a couple of instances where I'm like, holy shit, this happens all the time. And then it stops happening. And then the marketing team was like, I don't know how to create these viral moments with this product. Space revenue wise, we just couldn't replicate it. And so that's an entirely different issue. Cool. All right. Thank you very much on the panel. Our small group prompt. And actually, if the investors can swap tables, ideally just go, the table all have numbers, allow them to allow you to have more.